Let's get in another viewpoint. Rakesh Mohan, former Deputy Governor at RBI, joins in. Mr. Mohan, hi, good morning. Now that a temporary solution to the fiscal cliff issue seems to be in place, how much of a positive is this for emerging markets like India? And do you expect a sharp rally in equities?
Well, I think that there is not much of a direct significance for emerging markets or for the rest of the world. I think it's a general significance in that as US being the largest economy in the world, Europe in any case is in great difficulty. To now have some at least temporary solution to the imminent crisis that was expected in the United States, that clearly will cool markets down around the world. I don't think that there is particular special significance for emerging markets.
Mr. Mohan, the Democrats have compromised quite a bit on tax and rate relaxation. Do you see them doing the same on spending cuts as well? Because that is the big issue now, which really could bother the Republicans.
Well, yes, I mean, it's just like the Democrats have compromised in agreeing for the higher tax rates to kick in only at $400,000 rather than $250,000, one would imagine that they will also have to do some compromise on the spending cuts.
But don't you think higher spending cuts will lead to higher unemployment rates, and isn't that a major cause of concern to the US economy?
Obviously, the kind of spending, it sort of depends on the phasing in of the spending cuts. My guess would be that what they will need to do is to phase in the spending cuts and backload them to some extent, so that you don't have the immediate impact on the American economy, with the hope and expectation that, say, after a year, that you'll be in a better position in terms of unemployment. So that would be my expectation in terms of logic. Logic, of course, doesn't always work in political compromises.
But Mr. Mohan, if I look at the big picture, the US economy is yet to recover. It is largely central bank policy action which is driving the growth. If the current tax plan is implemented, which means spending will come down and taxes will go up. So do you think it's a matter of time this will have an impact on US economy?
No, not necessarily. It kind of depends on whether the US economy does start recovering over the next 12 months, over the next 24 months. Since it is now by September 2013, it will be 5 years from the start of the crisis. And to the extent that the housing market has slowed down considerably, so there hasn't been a great deal of construction over the last 5 years, and with the expectation of low interest rates for the foreseeable future, that if all of that works in terms of housing construction beginning, recovery of the American economy over the next 12 months to 24 months, then one would expect that it will be feasible for the American economy not to be hit a great deal by the spending cuts that are being talked about. But all these, of course, does depend on whether there is indeed a recovery in the next 12 to 24 months.
Right. So as we enter 2013, do you see global headwinds reducing for India?
I think that we have to be cautious, we have to be watchful, and not assume that everything will go well in 2013, because the European situation remains very tense, remains very fragile. Italian elections will be coming up in February, so we don't know what is going to happen in Italy. There isn't yet much of a solution to problems in Spain, nor in Greece. So I think that the European economy remains very fragile. Similarly, there are other issues arising, for example, in Egypt, both on the political side as well as the economic side. So I do think that we can't afford to relax at all. And it may be the case that 2013 in terms of global economy is better than 2012, but I don't expect a very fast or very significant recovery in 2013.